Hey there traders, hope you guys are doing well. So in this video guys, what I want to talk about is a very specific setup that can help you with your day trading to catch high probability setups and get the most out of your trading, especially day trading, because day trading so difficult. Just taking a walk along the golf course here near my house, just taking my dogs for a walk. So I just want to take you over to the charts and show you how to set up your charts and how to actually, with an indicator as well that you can use to make it easier for yourselves. I'll walk you through the setups and just show you how to find high probability setups just so you can bet bigger on your trades and actually get good returns from your day trades. I'll catch you soon guys, catch you over in the charts. So in this video guys, I just want to talk about a couple of things. The first thing is, do you ever find yourself on the weekends reflecting back on the previous week and you always have this epiphany of what you did wrong and what you should be doing the next week? So you always have these thoughts and these ideas and you actually understand perfectly clear why you lost the previous week and what you should be doing the following week. So next week I want you to change up a few things, and I just want to show you a strategy that I found that makes consistent profits and that helps you to become a specialist rather than a guy or a person that trades every single move in the market. Because typically what retail traders do is, as the market's dropping, they will typically trade every bounce that they see and lose money, and as the market's climbing or rising, they will typically trade every reversal or every little bounce they can see, and they'll try and predict the market. So they'll try to predict the bottom as the market drops, and they'll try to predict the top as the market is rising. So what I also used to do this, and I used to lose a lot of money trading the markets doing this. So what I'd like to show you is the strategy that I now use in order to become rather a specialist and become more of an efficient. Your trading needs to become more efficient. How do you become an efficient trader and catch the best setups? Okay, so what I had to do was, people don't generally study reversals or study reactions in the market. They'll just see, for example, this little reversal over here, but they won't study into why this was a 25 pip move. But typically they won't ever study why these reversals actually happen, right? Now typically what you'll find in the market is that the thing that I found work, instead of you predicting the tops and bottoms, generally the best thing that actually works is the break and retest. You will typically get a move like this, so you'll get a peak formation in the market. Okay, so you'll have this peak formation. As you can see, it's like a rectangle, and typically what you're looking at doing is trading the retest of that peak formation. So you'd be looking at trading when the price comes back to this level, you'd be looking to trade it back up like this, right? So how do you actually find these setups? How do you become more consistent with these setups? All right, so as you can see, if you study into peak formations, you can see that. Okay, so if we look into this reversal right over here, right? Now this is roughly about a 30-point move or so, something like that. 25, 30 points. You'll often notice that price will come back and retest peak formations in the market. Okay, I don't believe in trading support and resistance. I don't believe that support and resistance actually works, because typically you'll see resistance levels and price will just, like this, for example, if we're trading this as a support level, you can see price doesn't often respect support and resistance level, but it will more often respect the break and retest of peak formations. So you can see, looking left, 5 or 6 days ago, the market puts in a peak formation, and 1, 2, 3, 4, 5, 6 days later, so break and retest, price breaks above this peak formation, and then you can see over here at some point on Friday it came back and it retested this peak formation to the T, to the actual pip. You can see a peak formation over here. So as you can see, a price creates a peak formation, trades for a while, breaks above the peak formation and comes back and retests the peak formation perfectly. Alright, you can see another example here, peak formation in the market. Price trades below does its thing below, comes back above, and you can see how it retests the peak formation. You could have caught this on a 5-minute time frame. You can see over here, there's a peak formation in the market over here. Price trades, comes back to that peak formation. So price comes back to that peak formation and we get a reaction off the peak formation. Okay, so with this strategy, we are not looking to predict the market. So as the market's climbing, we are not looking to predict the top. Instead, we are reacting with the market when it comes back to these peak formations. So we have these peak formations marked out. Okay, and we are reacting to these peak formations. Basically, these are often high and low of the day. So an indicator you can use to actually find these. It's quite easy to identify these peak formations by yourself. But if you want an indicator that can help you predict these peak formations, you can use the high and low levels indicator. So you can see here, this was a peak formation. See how it marks out the high and low of the day. Well, let me just run you through it quickly. Here's high of the day, here's low of the day, here's high of the day, here's low of the day, here's high of the day, here's low of the day. So this indicator shows you the high and low of the day. Okay, basically, so you can have the high, any particular high or low of the day, and then you can draw a line across it or right through, and then you can wait for the price to come back and retest that high of the day or that low of the day. You can see here, here's high of the day. So you can draw a simple line running across it, a simple line like this to extend it, and you can see our price came back to that peak formation high of the day and then reacts off it. Over here was the low of the day. You can see price comes back to it and reacts off it. Right, even this was like 20 pips. You can see over here, same thing, price comes back to it and reacts off it. Where's this next one? Here, right over here, you can see here's a peak formation, here's low of the day, price comes back to it, comes back to our extended line and then reacts off it. So it's quite a simple system that you can use, and you can just see in the past 5 days, there's been 1, 2, 3, 4, basically a setup every day, almost a setup every day, using the system. So, because typically what happens is price always reacts to levels looking left. Alright, so instead of because quite often what will happen, you'll see that price will, let's just say for example, you predicted the top here, right? Price trades down. Let's just say you got lucky and you predicted the bottom here, and what you'll often find is that price, you'll make 30 pips, and then you'll see that the price will often bump its head. I like to refer it as price basically like bumps its head. So price will come back, bump its head on something, because often I would predict the market, then price would push down, for example, and then bump its head and then come all the way back up and stop me out at break even. So typically what you'd be looking for areas where price will bump its head often, and those areas are often the peak formations from previous days. Okay, so you want to draw up your peak formations looking left and waiting for price to actually come back to those peak formations. Okay, now it doesn't really have to be high or low of the day. If we actually if we look at this was obviously a low of the day at some point, but if we just remove that, if another way you can do this is just by putting in your peaks. You can put a simple arrow or something in your peak and extend a line out. Now you can look at Friday's move. This was a 25 pip move. I didn't catch this move, but I'm just showing you how this works. You can see this was a 30 pip move. So if we had this peak formation, this was one of the peak formations in the market on, when was this, on Friday, on Wednesday, right? So if you had this peak formation marked out, you can actually see that price comes to that peak formation. If you drop down to a lower time frame, you wait for the reaction off the peak formation, and then you trade based off the reaction, right? Because obviously, typically what I'm looking for is that prices, there are a lot of traders who are in profit now from the bottom, from the top here. Now what you'll find is that the price may trade back up, you know, and take these guys out. So I'm looking for traders who are in profit, and I'm looking for areas, peak formations where price will bounce and then come back to take out traders who are in profit. So instead of me trying to predict the tops and the bottoms, instead I'm looking for reactions of peak formations to go back and take out retail traders who are in profit. You can see how price respects peak formations all the time. If we just look at, here's a typical peak formation here in the market. If we just even remove this line, you can see, even if you just remove the lines, but typically you do want that high typically you do want that high and low indicator on, and mark your levels based with this, so your system is systemized, so it's easier for you to see this, or have them marked out manually. But typically you'll see that peak formations in the actual market, we can see a break and retest. So as I was telling you before, this is typically a, so this was a break and retest that basically looks like this, right? So price pushes through it, comes back, and that basically it was this setup right here. You can see here, so price, this was our peak formation, price trades below it, right over here, comes back up and retests it, and then drops, right? So it's this exact setup over here. Let me just start that again. You can see here, it's the peak formation, price comes down, comes back to that peak formation, and then reacts off it, right? So it's basically this peak formation right over here that price is reacting to. You can see how price is actually respecting that peak formation once, twice, 3 times. So you can see peak formations in the market often will get respected as a break and retest. You can see over here, for example, we have a peak formation. Price trades above the peak formation, comes back to it, comes back to the peak formation, then reacts off it. That's a simple break and retest. So what you want to be doing is, you want to have all these peak formations marked out. If you want to systemize it, then you can use the high and low indicator, or you can manually mark up your peak formations in the actual market. So you don't want to have too many all over the place, but typically you want to have the most common ones, or the highest probability ones, right, or the ones that actually stand out. So you can see a peak formation over here. So price breaks below the peak formation. Okay, so this, we'd be looking at trade being bullish off this peak formation, because this was a resistance level. This was a resistance peak formation. So price breaks above it, comes back and reacts off that peak formation. You can see here price comes back perfectly right to this level over here, and you can see the reaction based off of that peak formation. So this isn't support and resistance. I don't believe that support and resistance is sustainable. So what we're doing is, we're not trying to predict the market, we are trying to react with the market based on peak formations. So if you want this indicator, what you can do is, this is the high-low levels indicator. If we remove it, if you come here into indicators, you type high and low. And it is this one by H. Potter. Okay, so now we have our high and low indicator. So now this trading off these levels, obviously now it'll be systemized, which will make it easier for you. Or as I said before, you can manually do it yourself using an arrow or whatever you want to do to mark out those peak formations. So this is only giving you the peak formations based on the high and low of the day. But as I showed you before, the high and low of the day will often work out quite nicely as a break and retest level. Okay, so typically what you'd be looking at doing is just extending your high of the day and your low of the day like this. And then typically what you'd be looking for is for price to break above high of the day, do its thing, trade above, come back to this peak formation, and then you'd look for a reaction off that peak formation. It would be the same thing to the downside. So here we have a peak formation, so what we'd be looking for, price to break below the peak formation. Okay, come back to it, and then looking at price action to actually trade off of that peak formation. So it's a very simple system. You can try using it yourself, and this will also allow you to bet bigger, because a big part of trading is that what you got to do is wait for these, become a specialist and become more efficient in your trading. And the only way to do that is by actually sitting in your hands and waiting for very specialized, for very specific setups to actually happen. Because typically what day traders do is they'll sit on the 5-minute time frame and typically trade all these different moves throughout the day. But instead what you should be doing is waiting for very specific things to happen in the market. Professional traders wait for very specific things to happen, and they don't overtrade, because typically what you'd find is you'd take 3, 4, 5, 6 trades a day, typically trading the 5-minute time frame. But instead, if you just wait for that very specific setup, and then you instead of you losing 10-20% in your account, you could take that very specific setup with a good risk to reward and good risk management. You could make 5-10%. You could catch a really nice trade if you actually specialize in your actual setups and not over trading. So professional traders, the key difference between a retail trader and a professional trader is that the professional trader doesn't overtrade, and he's very specific on his setups, whether the setup works or whether it doesn't work. Okay, he doesn't care. He'll wait for that very specific setup. Even if it fails him, he'll still sit on his hands, wait a day or two, and because he knows that the rewards outweigh the actual everyday trading problems of overtrading and all that. The reward is much higher than the actual risk, because of risk to reward and because you're trading out of these high probability setups. So I hope this video helped, guys. I hope it gave you some good ideas going into next week. So instead of reflecting on what you did wrong all the time, actually implement better risk management and become specialized the next week in your trading. Do not, as I said, you have these epiphanies on the weekend of what you need to do, and one of the things you need to do is become more specialized and secondly, not overtrade. So when you see these nice setups, that means you can go in bigger than what you'd normally go, obviously with good risk to reward, and catch nice moves. That's the whole point. That's how you're going to grow your account quicker, by being more efficient, by actually catching high probability specialized setups. Hope this video helped, guys. I'm off. Have a good week.